Can you believe that it's November already? Time flies and the crypto market has been flying along with it. If you haven't heard, we just released our quarterly crypto industry report for Q3, covering the most important developments in the space from July to September. So in this video, we'll be covering the most important points and highlights that you won't want to miss. Starting off, we have our overview of the overall crypto market, which fell by about 10% to 1.1 trillion in Q3. A significant market downturn in mid-August split the relatively boring Q3 into two parts. Recently, however, the market has surged on the back of excitement for BlackRock's Bitcoin spot ETF. However, Bitcoin is the main beneficiary for this rather than the entire market overall, as we'll see shortly. Meanwhile, the dominance or market share of top cryptos remained relatively unchanged. Though the dominance of Bitcoin was slightly down in Q3, what's not captured as measured from the start of July to the end of September was that Bitcoin dominance had backtested the 2-year range from which it broke out from last quarter. Evidently, this was significant as Bitcoin dominance has continued to rally along with Bitcoin's latest price pump to slightly over 51% at time of shooting. Stablecoins saw some outflow, falling in market cap by about 4%. Despite outflows, USDT increased its market share from 66% to 69% by end September. Notable newcomers in this quarter include FDUSD, which Binance has been supporting via its ongoing zero-fee trading campaign, Curve's CRVUSD, and PayPal's PYUSD. On slide 9, we listed some of the notable events of this past quarter. Some regulatory-related ones to take note of include the court ruling that XRP is not a security, and Grayscale winning its SEC lawsuit to review its application to convert its GBTC trust into a spot Bitcoin ETF. Meanwhile, SBF and Suzu are also in jail. Turning our attention to the king of cryptos, Bitcoin, fell slightly lower than the overall market, being down about 12%. A few notable events that could have negatively affected Bitcoin's price in Q3 include the reports of SpaceX selling its Bitcoin holdings and Chinese property developer giant Evergrande going bankrupt. Meanwhile, in a move that surprises all of us, the SEC has postponed all spot Bitcoin ETF decisions. At the time of writing the report, Bitcoin's yearly high stood at $31,446. However, that has been absolutely blasted past by its recent move, which brought its price to slightly over $35,000 on many exchanges, roughly 12% higher than its previous high. Despite sideways-ish price action throughout Q3, hash rate continued to climb as per usual. Developments in the mining industry also continued. A notable one being that Vanguard, the world's second largest asset manager only behind BlackRock, has bought another 6.6 million shares of Marathon Digital and 2.7 million shares of Riot Blockchain, bringing its total investment in Bitcoin miners to 560 million. Despite the growing adoption and acceptance of Bitcoin in the TradFi world, countries continue to take diverging paths. In Q3, Oman has opened a 350 million mining facility, while Kuwait has banned Bitcoin mining and crypto altogether. As for how Bitcoin fared against other major asset classes, all assets saw declines except for crude oil, which was the clear winner with a 29% gain, and DXY, the US dollar index, which gained 3%. BTC and TLT, i.e. long-term US Treasury bonds, saw the largest losses. The Fed's aggressive rate hikes have led to long-term bond yields soaring, and as a result, their price has plummeted by 28% as of end September. As a reminder, bond yield and price are inversely correlated, and higher yields also explain the strengthening of the US dollar. Moving on to the second largest crypto by market cap, ETH is down slightly more than Bitcoin in Q3, declining by about 14%. It reached its yearly high earlier than Bitcoin back in April and has not broken it even in the recent market rally. This has not stopped the ETH Layer 2 space from getting busy, however, with L2s like Mantle, Linea, Base, and Shiba Inu all having been launched just this past quarter. Aside from ETH L2s, Sei, Sui, and OPBNB also launched their mainnet in the past quarter. Other trends that have caught the crypto community community's attention in the past quarter include Telegram bots and SocialFi platform Friendtech. Passing fad or no, they have both achieved notable milestones, with Telegram bots amassing 3.2 billion in trading volume, while Friendtech has accumulated 49 million in TVL. We've made videos on both Telegram bots and Friendtech, so be sure to check those out. DeFi was not dead in Q3, having actually outperformed the overall crypto market with only a 5% decline overall. However, it did go through quite a bit of a roller coaster to get there, and its valuation was mainly held up and boosted towards the end of Q3 by only a few DeFi projects like Maker and Oracle's Chainlink and Teller. ETH TVL dominance remained uncontested. Notable wins include Base, which accumulated 370 million TVL in about 2 months, and Solana, which increased its TVL by 19%, following a couple of bullish developments, such as integrations with Shopify and Visa. Meanwhile, BSC, Polygon, and Avalanche collectively lost almost 1 billion in TVL. A notable development in DeFi is probably real-world assets, or RWAs, where tokenized T-bills, that is short-term US government debt, take the spotlight in driving the growth of this sector. As of end Q3, tokenized treasuries have reached a market cap of 665 million. If you want to learn more about RWAs, we have a recent video on that, which we'll link in the description below. Moving on to NFTs. Now, things are not looking too good for the NFT space yet, as trading volume has continued to plummet by 56% in Q3 itself, a continuation of dwindling volumes since February. However, trading activity aside, there are still noteworthy developments in the space, including Pudgy Penguins releasing their real-world plushies on shelves in retailers across the globe, Krafton, publisher of GTA, entering the GameFi space, and Pokemon trading cards now being available on-chain. As for the exchanges, spot trading volumes are also not spared, having dropped by 20% on centralized exchanges. Notably, Binance's market share, which was as high as 66% earlier this year, has fallen to about 44%. Now, this is probably caused by all the FUD that Binance has received recently, from multiple top executives jumping ship to it exiting from multiple markets. The situation is similar on DEXs, where spot volumes have fallen by about 31%, with Uniswap maintaining its dominance as usual. Notably though, SushiSwap, which has been a staple of the top 10, has fallen out in Q3. Well, that's about all that we can cover for this video. Be sure to read the full report linked in the description below to get fully up to speed on the market developments of Q3. Also, drop a like if you found this summary and highlight useful. And if you want to learn more about Bitcoin dominance and its significance, well then check out our previous video on that right here. Hey.